Hello and welcome to what I call the ACF Equity Research Weekly video cast, podcast, and everything cast. I'm here with Christopher Nicholson, who's the managing director of that esteemed outfit. How are you today, Christopher?
Zach, I'm very good, and thank you very much for the invite as ever.
I have been saying that you're the only person who sounds posher than me and knows more than me about the markets, but that is open to conjecture. I think it's the right word.
I would agree with that on both counts.
Well, no, the bar is quite low on this side of the screen, so I think you're okay. But I normally have a rant sort of halfway through the recording, but in this case, I'm just going to come in with a quick one to open, I'm very inspired by that Norway, that great nation with I think it's got 2 or 3 trillion pounds or dollars or something worth of sovereign wealth fund. I mean, it's something like it's 2 trillion, something like that, which could nearly pay off if they actually felt that they were close to us and liked us. They could just pay off our national debt. Maybe they could pretend that we're all Vikings or something like that and pay off our national debt, and then we could
I
start.
think we are. I
What?
mean, whenever I go to Scandinavia, they always speak to me in the local dialect. I used to think that my heritage was entirely Scots, essentially, but clearly it's Viking from their point of view.
Well, I think you should just well, if you can make a negotiation. In fact, the other fact, which has nothing to do with this weekend, is that with this week, is that over the week I was sort of thinking about because I have a lot of spare time, thinking about the US wanting to take over Greenland. I think the Russians, probably Putin, wants to take back Alaska because he was enjoying it there, and they sold it for $7.2 million, which was not a great deal, I think, at the time. Well, actually, it might have been a great deal at the time. And so I was trying to work out how much it would cost for Trump to take over the UK because I think we might need that. I mean, with the JD Vance here as well. I think it was actually just a scouting. They were just scouting for what they would buy, how they would refurbish it, and everything else. And so our apparently our net value is 12 trillion pounds. So the value of this country, all the assets and everything is 12 trillion. Our debt, as you know, is
Is that
rapidly approaching
just the
3
housing
trillion.
market?
Sorry?
Yeah. Is that
Yes, well,
just
yeah.
the housing market, the 12 trillion?
Well, I mean, so I'm just trying to come up with a figure, the figure we'd be happy with, right? So 12 trillion is the value of the country, and then another, maybe you add another, few trillion because, culture and stuff like that, Shakespeare. But 3 trillion is the national debt, so that takes you up to about 15 trillion. So I think that if there was a bit of M&A on the UK front as being a 51st state and everything else, I think 20 trillion would do it. If I was
Can I
Prime Minister, I would take 20 trillion from Trump and we'd have we'd be a proper 51st state of the US and we'd all be happy.
can I offer you an alternative valuation very briefly?
Okay, go on.
If I was Trump, I would offer you a nominal $1 to take it off your hands in its current state.
Ooh. That's the sort of thing I say, not you. That's for you. That was actually my line.
I
All right,
mean,
let's
the
get let's
macro direction or macro management. It's not so much the macro direction; it's the macro management that makes me say such a thing on a Saturday morning, Zach.
Wow. Really, that is but no, that's great. So we had a few things to talk about. I was wanted to talk about the AI bubble, alleged AI bubble, but I think probably we might as well start with the Bitcoin Treasury strategy companies. And I think your comment that they may not be working quite as well as they should be.
Yeah, so it's a really interesting question, and I'm sure we will come back to this at various times, if only because the fundamental problem is that it's a very volatile asset, which means by definition in a bull market it's going to outperform, and if you've got a bear market it's going to underperform, but it's super volatile. And I think initially it did pique investor interest because you had a few people get away with some good raises, etc. And there have been some stocks that have outperformed for certain and have done better than the value of Bitcoin itself. But that in of itself is something to ponder. So effectively, I think two things are happening. One is if you're doing something else, let's say for the sake of argument, you're trying to dig something out of the ground, And then you also launch a Bitcoin strategy, Treasury strategy. As we said, first of all, do you really know enough about Bitcoin to be able to manage that? Isn't your skill set actually trying to find stuff to dig out of the ground? Okay, issue one. Issue two, if you're an investor, it clouds what you're actually investing in. How do you make your judgments? Because on one hand, you've got a long-term play where you hope you'll get a minimum 10x out of it if it comes right. On the other hand, you've got something that essentially amounts to a day trading strategy in Bitcoin. So you've got two contradictory investment philosophies. That's very confusing for investors. And the other thing is, Bitcoin, whether we like it or not, is still extremely sentiment driven. I don't believe that's the long term outcome for Bitcoin. I believe a lot of these cryptocurrencies will end up being legitimate, perfectly good investments, etc., etc. But for now, as that market develops and as economies develop with respect to using Bitcoin and figuring it out, etc., it's highly speculative and it's driven very much by sentiment, which means that suddenly your company is driven entirely by sentiment and could be fabulously valuable one day, and then within the space of a week, 98% of the value has been destroyed. And investors are cottoning onto that, and they're becoming increasingly cautious with respect to Bitcoin treasury strategies, especially when it's a dual strategy between, say, my core is making drugs and I'm also doing Bitcoin. Does a small company have a big enough skill set for that? It's a good question, and I personally doubt it for now, but let's see how it develops. But I think that's why you're getting the underperformance. Speculatively driven, increasing concern about whether or not it's a legitimate strategy, and some fear that it might be, financial markets fashion a bit like SPACs, which ended up losing 98% of their value in many cases.
Well, it's a bit harsh, isn't it?
Yeah.
Right now,
Why
so
did you ask me on?
on what you're really going for the jugular today, right? What was the first
I must not have had enough sleep, Zach, or
country?
not enough coffee.
The country's only worth a pound or a dollar, and Bitcoin BTC is a complete pie in the sky. But I think the issue, which is a little bit more.
I don't think it is pie in the sky. I think BTC has a legitimate place. I think the issue is we're very early in the game, and investors are becoming rightly skeptical in case it's a financial fashion, because it does feel that way at the moment. That's really my issue. Long term, I think it's a good idea, but I think there are a lot of people jumping in who, can they demonstrate they have the skill set? It's arguable.
Well, I think there was the love that dare not speak its name. What I'm going to reveal is, I think the only, probably the main reason, 99% of the reason why the Bitcoin Treasury strategy stocks have disappointed, and it's purely to do with you're a company which is trading at £1 a share. You've got 100 million shares in issue, and you raise money to buy Bitcoin. Obviously, you might dilute yourself by 20%. So you issue,
Yes.
right? So 20 million more shares. I can't actually remember how many shares I said. So it was 100 million to start. You issue another 20 million and you raise £2 million. Well, therefore, you've diluted by 20%. Therefore, Bitcoin, like for like, needs to go up 20% just for the shareholders to be okay. And then, the share price, let's say it goes up, which it did in the first place, or the share price goes up, which, Smarter Web did go up. So you have that sort of happy pyramid of raising it 10p, 50p, a pound, etc. That worked really well. So it's sort of pyramiding in, and it works really well. The problem is then the share prices started going down, and the company's still raising. So they're raising at two, like £5, £4, £3, £2. That doesn't work so well. So that's the opposite of a pyramid. It's a sort of down raises, which are disastrous. Whether you're doing that for buying Bitcoin or doing that for buying a piece of land or anything else, that is a problem. So it's just the equity market. You're always supposed to raise money at higher and higher prices. Otherwise, you don't raise. That's the ideal scenario. Or obviously
Yeah.
you buy, you buy share, you buy your shares back. The equity needs to be tight. And in these cases, if you're raising at 50p, 40p, 10p, 5p, well, you need Bitcoin to go up to double and triple. I mean, and it was said by, siren voices at the beginning, this doesn't make any sense because if you've raised 100%, if you doubled your shares in issue, you do need Bitcoin to go up to from 100,000 to 500,000 to be okay. So that is an issue, and I think that's something which obviously being friends with the broking community, being friends with the small cap community, and not wanting to be assassinated. That I think is the elephant in the. I don't actually. It's okay now, but that is the elephant in the room in terms of this. So they raised a lot of these companies. They got very excited. Obviously, the brokers got excited, investors got excited, and they raised too much money too soon. The other thing is, which is an equally large elephant, is that the Bitcoin Treasury strategy people started when Bitcoin was 100,000, let's say in May. Now it's 115, let's say it's 118. So let's say it's gone up 20%. Let's be generous on that. Nothing, none of the sizzle of Bitcoin going up has really gone or you wouldn't notice. You can't tell the wood for the trees. But just imagine if Bitcoin had gone down 20% or 50%. These companies are heavily geared on the downside and only moderately geared on the upside. So I'm being you this week, and you're being me, I think, in terms of the explanation. So that is exactly what you would say to me if I was saying, "Oh, why are the shares down 80%, 90%?" I think even Smarter Web's down 80% over the last month or something. It's still up 3,500%. So that's great, but I don't see how you can get out of it. It's a bit like being a negative equity. It's a bit like, as I said, the down raise is just it's stock market rule 101. And I'll give an answer. If you are going to do it, let's say we set up a company tomorrow called ACF PLC. It's a Bitcoin treasury company. What I would do is I would beg, steal, and borrow debt. So I'd ask somebody give me £1 million, 10% coupon, as much money as you can with a 10% coupon a year. I would then hope that Bitcoin would go up more than 10% a year, and I could pay you back. I would only borrow, only buy 80% of Bitcoin, keep the cash, etc., and hope that the price of Bitcoin would go up, but have a little cushion there in case it didn't or it took longer. So that's how I would do it if we were setting up a fund tomorrow or listing tomorrow. I think we should do that on Monday.
Monday, did you say?
Yes, because
But so I would say just
That would be better than all the other companies out there.
that certainly would be our pitch, I suppose. I would add a couple of things to what you've said there. One, if you were to do the debt strategy, or we were to do the debt strategy in this scenario, we would have to ensure that it wasn't a CLN, because again, we come back to your dilution issue. And I think we're both picking out two sides or three sides of this, three elements of this issue, which are key for investors, which is one, you're talking about dilution, of course, that is absolutely key. I'm talking about volatility, which is a killer. And then finally, we're also talking about competence. However, and I'm just going to switch sides as if I had plenty of sleep and plenty of coffee. There is one element to think about, which is that in the end, if you need to raise capital and this is your only option, then that is part of the game. Dilution happens with growth companies. The idea is you temporarily dilute it and then it builds. So whilst, of course, I completely agree, you should be raising 5p, 10p, 15, 20, so on and so forth in an upward trajectory. It doesn't always work out that way. And sometimes you have to do it the other way around to stay alive or do the deal in the current market circumstances that you find yourself in. So that would be my defense exception to your horror of steadily downstepping the price of a raise.
Down raises. What a lovely concept that is. I think the final point, which is a cheeky one, which you would expect, is that over the last few weeks you've had because these companies know that normally the guys there are middle aged. They're like the old, wrinkly, and fat, and they don't know one end of a Bitcoin from the other. So they hire these OGs from the dawn of the digital crypto age. They're like 35 with trendy hairstyle like that or something like that, and they actually bought Bitcoin when it was like 5 cents, and they didn't buy pizza with it. They actually kept it. And now, 13 years later, they've joined the board of XYZ, PLC, crypto strategy, this, that, all the other stuff like that. And I'm thinking, if they're that clever, if they are one of the OGs, they don't need to work. they bought Bitcoin at $1. It's now like 100,000, 120,000. Why are they working? But they come on, they're all like weird because you're supposed to be weird if you're a crypto person. And
I think we go back to Napoleon, which is men will die for coloured ribbons. So, which is basically saying if you give people social status, they feel much better, and it can be a great substitute for pay. So, coming round to that, if you're sitting on essentially your own created trust fund, you don't need to work. You still need to feel useful. So they need that. This is what's happening. But what would give concern is what experience do they have of running a business?
I don't say that. Just you're just coming up with these stabbing comments. All right, so you wanted to talk about some stocks. I wanted so well because I don't feel I big up the ACF angle on the world and how useful you are. I mean, apart from obviously your font of all knowledge and everything else on almost everything, apart from probably dating. What were the stocks you wanted to talk about?
Well, do we want to touch on AI for a moment? I mean, I'm not going to be joyful about it, but do we want to do we want to touch on AI, or should we move on?
No, no, we just quickly because there was an article in the Telegraph which I'm just reading, even though I didn't want to, about the on Tuesday there was a crash in AI stocks, and I think Palantir went down 2.9% and something went down a
I
half.
think it's 20% over the week or something like
Yeah,
that.
yeah,
So
but
it
it
was
was like
9% on
yeah,
Wednesday.
something absolutely horrible. And obviously, we don't know how to value these companies anyway. Really, I don't think there's no
Mm.
proper sort of measurement. Obviously reminds us of when we were young or younger in t 2000, the dot-com bubble.
Yes.
And in fact, both sides were right. There was a bubble, but actually, in the end, dot-com proved to be, the whole new world, and obviously AI has come from that. So it's all happened, but obviously you have the oscillations in the meantime. AI is it a bubble or are we? There's two. The question is it AI a bubble or is it actually the other way around that we don't actually know how much it's going to change our lives, and it might be the case in a year's time we don't actually have to dial into this call. We'll have AI just being you and being me and being funnier, wittier, and better looking.
You're almost impossible. I mean, I can't imagine such a thing. But more seriously, it's okay. So there was a piece in The Economist last week, or the week before, which suggested that AI has in fact over-delivered on its targets. And I'm going to come back to this. In other words, it has achieved things faster than even the protagonists for AI have suggested. So the likes of Altman, etc. But actually, I see where they're coming from, but in terms of usefulness, AI is hugely overstated. I mean, it's essentially still a child's toy in many respects. There are some things it does really well. I I'm not against it. It is a very important and significant development. I think its place is in back office and operations. I don't think its front office performance is anything like stated or close, and I don't think it's anywhere near close to getting to it. When you test it, what it generates is so poor and so unreliable that I mean, really, we joke that we want our money back. I mean, we haven't spent any money on it, but we want our money back insofar as, Google execs, the likes of Sam Altman, etc., have created a bubble. I mean, hilariously, Sam Altman said last week, "Oh, there's a bubble in AI that someone's created." Yes, Sam, you, Tesla, Google, etc. And I think that's where we are. And I think we will go through a period of creative destruction. That is not to say that AI is not important and not significant. It really is. But I don't think it's front end work. I think it is operational analysis is where it will really deliver value. There are questions as to whether or not any of these companies can deliver a significant return. And I do think the TMT analogy, Zach, that you made is pretty close to the mark. There'll be creative destruction, but in the end, it will show that it's, made a revolutionary difference to the way we live and work.
I think yeah the it is a bit like the early Google search and that you ask for a shepherd's pie and it shows you a picture of a shepherd, something like that. You see what I mean? It's that kind of thing, and I did dream that that ChatGPT would be able to correct the spelling and grammar in my my weekly articles, which I think would be a good thing because otherwise people are trying to guess what I'm trying to say, which is not great. But there was a company called Growth Acid Management Productions or something like that, and it corrected it to Growth Asset Management Productions. It's like, so I've got to like edit the edit. Right, and I can't have that because then it would look obviously that I've used AI to write the whole article, which
Yes.
I can't, and I can ask it to write, write about MAST energy or whatever we're going to talk about in the style of Zak Mir, and it'll come up with one or two lines because obviously there's 25 years of my rantings on the internet, so it has good modeling things. But at the moment, it is a bit of it's pot luck in terms of getting stuff which is good, and you do get that shepherd's pie type of issue, and that isn't good. So you're almost it does remind me a bit of the 1990s when the search engines in the 90s, and now the AI sort of engines in 2025, and it is not reliable. Thank God, because otherwise, I prefer it if it was not ready for another 5 or 10 years to see me out, and then my AI version can then take over. I think that would be the. It's a bit actually like, I don't know if you remember Max Headroom from the 80s.
Yes.
Where it's like that, with the sort of the built-in sort of, I don't know, had it's like a built-in stammer or something like that. It would get stuck.
Yes. Yeah. I
So
forgot what they
so
call that now, but yeah.
yeah, exactly. In fact, your screen's doing that with the sort of the green screen effect. Is giving it that 1980s that
Is it?
1980s. No, but so the fuzzy thing around the green screen thing that is like that. It's a
Yeah.
bit like the Ready Brek thing as well. Remember the Ready Brek thing? So I'm just taking you through your childhood and everything. But
No, and I think we have to fix that. Have to fix the screen issue and the lighting.
no, but the main
Um,
thing is you can see
yeah.
ACF. But yeah, so so we've done the AI bubble. Let's just go through to your stocks because you do normally have a good angle on these things.
All right. So we've got a few things that we'd happily touch on today. I mean, they all merit more depth, but that's not really our format or timescale on this show. But so a couple of things to talk about. I think Wishbone is worth a little mention. Some suggestions: is it the next Greatland Gold? So this is based on the Brescia announcement last week. I think it's worth just saying why a Brescia is potentially exciting. So if you think of a tube in the ground full of broken rock, and then it's kind of filled up with hydrothermal fluids, so hot fluids, which cool and essentially create this sort of solid mass between the gaps, like a filler if you're building a building. And what's exciting about hydrothermals is that they lead to high concentrations of metals, and the metals that are typically associated with the breccia are things like copper, gold, silver, uranium, and rare earths. So they're also, if you think about them as being like a tube, there's some excitement about the economic efficiency of extraction, and they often suggest or can suggest that there are further extensive mineralizations nearby as well. So that's why everyone's got excited. And I think the stock was up, was it 40% or something last week, something like that.
I'm just
Whether or not,
checking at
is
the
it something
moment.
like
I
that,
think
Zach?
the shares are up. The shares are up 6x so far this year, right? So that's a big thing. What
Yeah.
was interested that some, and they're up in the last week probably. I think it was oh 200, almost 3x actually, 290% up this week. So it's been a
Okay,
fantastic week.
so they're up 40% one day. Okay,
Yeah,
fine.
yeah.
So it's, and they've come from a very, very low base. So the question is, at 40 million market cap, could they be a Greatland Gold, which I think now is what, 1.7 billion market cap? So what's that? I mean, in very round numbers, 35x left, something like that. I think it's very, very early to suggest that it's another Greatland Gold in the making, because the cores are on their way for chemical analysis. So it depends what's in the cores. But the Brescia is an exciting geological discovery. So I think that helps part of the excitement. So that's Wishbone
Yeah,
for
but I
this
think
week.
there's
Let's.
just quickly 2 points on that. One is that everyone's very excited about the Brescia pipe, but actually, I don't think anybody actually knew what it was, but it just sounded great. And the other point is, you're obviously saying it's too early. If you don't get in early, you'll be too late.
All right. True. Also
Just
true.
assume it's 40 million market cap and it's good to go. It's all great. And it has to be said that on social media there was somebody's going to saying, well, hey, Wishbone's up a lot this week, and somebody said, well, they're still down 99.9% from
Yeah,
their peak. I
they
hate the
are.
company. I hate you because you like the company, and
That seems a little strong.
they've absolutely beat their shareholders. So
Yeah.
that's my thing. It's like assume that we're good to go, but just remember that we remember the fallen soldiers of history on Wishbone Gold.
Yeah, and I think that's very fair. And you could make similar comments about Greatland actually in that respect. However, uh, one has to remember that small cap investing, it has to be a balanced portfolio. You can't be putting 10% of your holdings into one stock. It's potentially suicidal. It's got to be a balanced spread, and you also ideally will have a fully integrated strategy, which means you also have some large cap, and you also have some, you have some treasuries somewhere as well. So
I,
balanced,
I
focused investing.
I love your words of wisdom, and I know that 99.9% of people would never do anything approaching what you're saying
I know,
because
I know. The temptation is to
there's
pick
no fun in that.
five small caps and hope one goes right, and you get your 100x or
Yeah,
your
I
several
think
10x's or whatever.
10 grand in a BTC, 10 grand in Wishbone, 10 grand in MAST, that would have been good as well, right? I mean, that was also
Yeah, yeah.
that
You're
also
preempting my excitement. Yes.
that also did that did the Wishbone turnaround after the beep. It actually did the Wishbone turnaround. So could you just
Yeah.
remind us why it's done the Wishbone type turnaround?
You're talking about MAST.
Yeah.
Yeah. So MAST also, there's some lovely numbers in there if you don't look at the all-time return. So if you look on a shorter time scale, 1,000%, etc., etc. I mean, effectively, MAST has got its act together. The strategy is in place, which it has been for a while, but what's happened now is execution, and they are making the progress as advertised, which we have talked about in a couple of research notes as well, and they are delivering, and to some extent, they are now delivering ahead of time scale. It has a strategic position in the energy market. You can't not have the kind of generators that it is putting in place. It is broadening its potential revenue stream by now doing a sort of intent deal with a co-location space for AI computing, which of course has huge energy requirements, and the kind of engines that it puts in place are ideal for this. And it has hit upon this solution, which means it can turn around planning applications quickly because there's been a slight change of legislation as well. And so it is in this scale area that is well supported by legislation, allows it to turn everything around quicker than bigger providers. It's got a target of 300 megawatts. It's basically got things on the board for 150, which has come through in the last couple of weeks. So we can now begin to look at it maybe a 200 megawatt valuation rather than 150 megawatt valuation, which is what we did at the moment. And so we're liking a lot of the execution. But if you've been there since the beginning, it is still very painful and there's a long way to go. But if you've been there for the last, sometime over the last 24 months, it's been absolutely fantastic as an equity investment at the moment. Not enough liquidity, needs more liquidity, needs to keep executing, and we want to see it go beyond its 300 megawatt medium term plan,
So
which we think it will.
sorry, energy storage or energy? It doesn't even. I mean, I was looking
Energy
on.
generation. It is
Yeah.
capable of doing energy storage too, but it is not doing that at the moment. So it's got these little engines that deliver um, peak power for which it gets remunerated very, very well. And the network, the physics of an electricity network means you cannot do without these small peak power generation engines to create what we call network stability. And actually, if you lost all the power in the network, so you had an outage in an area, you need one of these engines to start the process of what we call rebalancing the network. Because when you get to large scale, everything changes in science. It's what we call the scale up problem. So this is why they have this strategic position. These types of companies, they have to be on the network. You cannot run an electricity network without companies like this. And battery doesn't do the job at the moment. Plus, it only lasts 4 to 5 hours. So it's a long way different from having a generator that you just keep running.
So it's still only a 21 million pound market cap company, which is great,
Yeah,
right?
but that I
So
mean, it's more or less doubled this week.
when you're doing your balanced portfolio and you put 90% of your money into MAST, I mean that's the cool thing to do, right?
That is an exciting thing to do. I will give you that, Zach.
It's only a tenner.
and
No, I think
and
the other
fun if
thing
you
is with this because I hate net zero and I hate obviously I'm not a big fan of
yeah.
Ed Miliband either. When I become prime minister in 2021, 2029, and I get rid of all that net zero rubbish, would Mars be affected or would it still be trucking?
No, because part of the beauty is that currently the engines run on nat gas. That what they do is they help the wind systems and the solar systems operate on the network. So without companies like Mast, you couldn't have solar and you couldn't have wind producing electricity into the grid because, or not in a way, not 20% of the network for certain. You need them there as the backup system when the wind doesn't blow and the sun doesn't shine and the batteries are flat. Um, if we went to net zero, their engines can convert very quickly to biogas and to
No, no,
hydrogen.
I was trying to get
So
trying
they
to get rid
go,
of net zero. I can't stand net zero, so I'm trying to get rid of
yeah, okay. But even if you became prime minister, which would I'm sure generate lots of different types of celebration, even if you were to become prime minister, Zach, and you said no more wind farms and I'm closing down all the solar farm, I'm going to tax you all to death because I have a huge bill to pay from the last government. If you said that, they're still okay because they have this strategic position to do with the physics of a network where you need engines like that, and they what they do is they deliver relatively inexpensively from an infrastructure point of view. They deliver peak energy loads. If you made the grid in such a way that it could cope with any possible bandwidth of demand, you could never afford to build a grid. So what you do instead is you put on these little low capex engines in strategic places to cope with peak demand. So they still have a business model, even if you had no solar and no wind power. They'd still be
Okay,
needed.
okay, all right. And finally, you got 5 minutes to talk about the rest of the stocks you mentioned, none of which
All
I've
right.
heard of. Brainstorm, Perpetua, etc., IXR,
Yep.
that sort of stuff. So just quick
IXR.
mention,
Yeah.
quick
So,
1 minute each.
okay. IXR, Australian-based company, they do REE exploration, which at the moment you can't get the right price for, but they've got the assets, they're developing the mine. Their other string, which we really like, is rare earth element recycling. They have various other expansion plans. We really like it as a story. It got hit quite badly last year, but is recovering now and is at about 90 million market cap. So worth looking at. We have some research if people want to look at that, but it is worth looking at. It's a really interesting strategy. We think more mining companies should adopt these types of strategies. Whilst we're on REEs, you might have a quick look at Rainbow Rare Earths as well. They have a very good low cost strategy. They're trying to build some interesting relationships in the US. So again, worth considering. Then another company that we like, and we like this story. And first of all, I'm going to tell you all the terrible things. So this is a company called BCLI, Brainstorm Cell Therapeutics. It is based in the US. It is an Israeli tech company in healthcare. It has a possible solution for motor neurone disease, so a therapy for motor neurone disease. There have been some fascinating personal testimonies about the data. We've been looking at the company for about 3 years. It's like any biotech. It's very high risk. It's very 0-1. But there's something about this story that gives us a real sense that they might just get over the line.
So
Their
are they
challenges are they
using
don't have the cash.
are they using stem cells? What are they using for this?
They're using stem cells, yes.
I wish I
But the
thought of that.
data, say again?
I wish I thought of that, but I actually thought of that.
Ah, yes.
I thought of that like 8, 9 years ago when my mother had Parkinson's, and obviously, if you suggested that then, because all the big pharma don't want you to cure people because they want them to take tablets, it went down like a lead balloon. But I'm very happy to see that, and I think even Ozzy Osbourne was trying to do something along those lines, but he obviously ran out of time. But no, that is it's a massive area. That will be a massive area, and it will be the cure. All of the, I mean, the stem cells will be the cure for a lot of the degenerative diseases. You heard it here first.
Yeah, and they will get there.
Yeah.
Somebody will get there. So BCLI we think is a great candidate for this. It has a lot of challenges. It missed its. It tried to hang on to its Nasdaq basics, like over $1 a share and all the rest of it. It missed those. It's been reduced to OTCQB, which is a much better market than it was 10 years ago. So it's still a perfectly respectable market, but it is a problem coming down from Nasdaq to OTCQB. They'll hope to go back. And of course, they're short of funding. They're an Israeli company, which probably doesn't quite go in their favor in a sort of general position right at this moment with the Gaza issue. But I mean, they are incredibly driven, and they have hung on, showing fantastic management focus and determination and sacrifice of the key executive team. And they really do have something. The research papers are great. The personal testimonies outdo the FDA approval process. There's something about it that looks really promising, notwithstanding that healthcare is a 0-1 and it may not make it, but it is definitely worth a look. And so that's a US company.
Well,
And then
speaking. All
finally,
right. Oh,
yep,
you've got 1 minute left. If
one
you can
more.
squeeze. Yeah. Go
Yeah,
on.
perpetual resources. So we really like this. This is an interesting story. There's a gold story here, but the real strategic story is the antimony story. They have one of basically the only near-term antimony resource in the US, which has military and battery applications. So strategically, very, very important. But that's the strategic story, which gives them, we would like people to think about it as tacit regulatory support. So they don't get special favors. But one can imagine that because of the antimony asset being the only one in the US that is near term in terms of production, that there are other considerations come into play when they ask for their permits. They're very, very careful. They're very ESG. It's all extremely good, but they get it. They've got their permits, etc., etc., etc. But the valuation is actually based on the gold asset, not on the amount of antimony. Anyway, we in about August 2022, they were at about $2. We priced them at 5, so on and so forth. They're now $18. So it's been a fantastic return over 24, 36 months, and we still think it's a good story.
Thank you, Christopher. We're out of time, and we'll speak hopefully next week.
Pleasure. Thank you, Zak.